What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I finally have some breathing room. Got done with my major paper, did well, got a 96 out of 100, did very well in my midterm. So things are starting to slow down a little bit for me. And my goal is to try to get maybe 6 or 7 videos a week. But the problem is YouTube's processing error is not letting me post videos at the appropriate time, and these edit errors are becoming a major issue with YouTube influencers or YouTube people that make YouTube channels. And you guys have been amazing subscribers, by the way, because we're almost at 10,000. So I'm going to try to go here and there. Again, you got to hit the notification bell. I may go live if I have some breathing room certain days, unannounced. So I just want to let you guys know. You just got to hit that notification bell on your YouTube app, as well as once you subscribe to my channel. So anyways, I have 3 dividend stocks to check out for you guys. These are all requests that you guys made. They're really good. One of them I own and I'm long on, and a lot of you guys are new, so need to kind of do some remixes on some of these dividend stocks. And they look really good, by the way. These are really good. So I'm going to definitely do an in-depth review on them and explain to you why and explain my rationales as to why they're really good. And remember, this is not financial advice for entertainment purposes only. Disclaimer in the description. So make sure you smash that like button. You didn't hit that notification bell yet. I'm telling you, hit that notification bell after you subscribe. So let's check these stocks out right now. And of course, we're going to start with ARC. These guys came in a little late with my dividend income, and these guys are not doing too hot against the S&P right now, which makes them very attractive. Once the dip happened during the pandemic and people hit the panic button, they're sitting at 913. Right now, they're at 1886. They have a dividend yield of 8.91%, a PE ratio 6.13, average volume 3.48 million US dollars. The market cap is 9.33 billion US dollars. Year range is $17.03 to $23. Day range is $17.87 to $18.93. And its previous close was $17.93. So I'm going to explain to you why I really like these guys and I'm long on them. So let's check this out. So they have a balanced portfolio of defensive industries, and they say that they're well diversified. So as of March 31st, 2022, Ares Capital Corporation's portfolio had a fair value of approximately $19.5 billion and consisted of 395 portfolio companies backed by 201 different private equity sponsors. Ares Capital has a diversified portfolio in terms of issuer concentration, asset class, industry sector, and geographical representation. So the big composition that I like in geographic composition. So 20.3% of them, their portfolio is software and services. 11.3% is healthcare. 9.7% is diversified financials. 9.4% is commercial and professional services. 5.5% is insurance services. Then they have the senior direct lending program. Capital goods is 4.5%. Automobiles is 4%, consumer services 3.9%, and retail and distribution, I like that they're included, as well as food and beverage. So their biggest locations are the West and Midwest. So the West is 33.7%, Midwest is 26.2%. So if you go on their website, they are very transparent with all the stuff that they have. So the big thing is healthcare services, a dental services provider, the insurance services. So they're extremely transparent, which I like about these guys. So a few things I find very interesting are a lot of their software and services I think are really huge. AQ Sunshine, I did a little digging on those guys. They have a really good reputation. So a few of these companies I did some just to check, see if they're legit. And these are really legit companies that do pretty well. So I was very impressed with these guys, and this is why I bought them. So their software and services, I think that is huge right now, because that is, the competition is high for that. Healthcare services is another one. So I think that's huge. Food and beverage. So here's a supplier of dairy-based food and beverage products. So I think that's huge. I mean, the diversification is what makes these guys so strong, and that's what makes them an excellent business development company. So I'm going to go over their revenue and their dividend history. So as a business development company, this is in millions US dollars. Started in 2015, they're 1025, then 1012, they went a little down, then 2017, 1160, then 2018, 1337, then 2019, 1528, then 2020, 1511. That's not too bad for a business development company in the middle of a pandemic, and then 2021, 1820. So they are doing very well revenue-wise, which makes them very attractive. I see an increase in revenue. I see a demand for their products as a business development company, and you have to be extremely careful buying business development companies. You have to know the nitty and gritty what's inside of them, because if you look at business development companies like Prospect Capital, they have decreased their dividend over time, which don't make them very attractive. So let's check out their dividend history. So I just want to let you know there are a few curveballs with ARC. I own these guys and I'm long in them, but with the incoming issues with the potential recession again, there have been some cuts in the past, and we need to be careful with our investments. And again, this is a business development company. Things can. So let's start in 2011. There is a curveball that happened recently with these guys. I do want to address this with you guys. I know I have posted numerous videos on these guys. So 2011, they were 35 cents, and then 36 cents in 2011. Then 2012, they were 37 cents. Then they were at 38 cents for a while. Okay, so they're 38. Then they cracked 39 cents in 2018. Then 2019, they were 40 cents. Then 2019, they hit 2 cents. 2020, they hit 40 cents. 2021, they hit 41 cents. That would be JXN, Jackson Financial. It has a dividend yield of 8.14%, a PE ratio of 1.07, average volume 1.71 million. The market cap is 2.33 billion US dollars. Its year range is 22.29 to 47.76. Woo! Way down there. Day range 26.39 to 27.16. Its previous close is 26.75. So what do I like about these guys? And by the way, this is an excellent choice, and I'm going to explain to you why this is an excellent choice by you guys as subscribers. So I'm on their website right now, and they're saying this is who we are. So they committed to reducing the complexity of retirement planning, their retirement products, financial know-how, history of award-winning service, and streamlined experiences strive to reduce the confusion that complicates your plans. We believe by providing clarity for all today, we can help drive better outcomes for tomorrow. So they lead with purpose. They're committed to a culture of integrity, inclusion, empowerment, and growth. They're a family of companies, so all of their businesses are aligned with a common purpose and set of values. But the independence and unique culture of each of us to offer the intimate, personal level of service that's been their calling card since we opened our doors. Intimate. You say intimacy. They have that word there. So Jackson National Life Insurance Company, Jackson National Asset, Jackson National Life Insurance Company of New York, PPM America. So this is very interesting. So the big thing about these guys is their revenue and their dividend history. And revenue-wise, you see a turbocharged push of revenue. I mean, unbelievable. Look at this. 2019, they're a little down from 2020, so it was 3,478, 2020, 3,206, and then 2021, 8,848. So their revenue is jumping up. So they're on fire right now. Revenue-wise, they're doing very strong. These guys look very attractive as a dividend stock with an increase in revenue, a new kid on the block, and I'll show you their dividend history. And check this out. They just started distributing a dividend. 2021, it was 50 cents. And then 2022, it was 55 cents. So JXN, right here on Zacks, they call them a sell. I don't think so. So right here, I like this. Now, they're a high yield. Payout ratio is kind of low. But again, they're a new kid on the block. That dip happened significantly. I don't care what Zach says. These guys are in demand, and they're generating a lot of revenue. This one I'm considering adding in my M1 Finance dividend portfolio. I'm not even kidding. I really like the way things are looking with these guys, and there's a lot of potential. So let's jump to the final dividend stock. And the final dividend stock is Territorial Bancorp, TBNK, dividend yield 4.43%, PE ratio of 11.05, average volume 13.98, market cap 191.80 million US dollars. Year range is 2030 to 2681. Its day range is 2058 to 2093, and its previous close is 2085. So I did some digging on these guys. They are located in Hawaii. They have 30 locations. So again, territory-wise, there's not that many banks in Hawaii. There's not that many companies in Hawaii. So they have 30 locations. That's one thing that makes these guys very unique. And in a competitive market in Hawaii with a bunch of banks and competition, this is good for these guys. And I'll show you their revenue and their dividend history. There's some pros and cons with these guys. I think one of the cons is they're just in one state. So 30 locations, you have to compete with other banks. So that's one thing that's in Hawaii's pretty small. So that's a problem. 2015, this is in millions US dollars, 68, 2016, 70, 2017, 72, 2018, 76, 2019, 83, 2020, 76. You can blame the pandemic. And then 2021, 66. So again, you're in a small state by yourselves, 30 branches, it appears on their website. You can correct me if I'm wrong, but that's a problem. That's one flaw I see with these guys, but their dividend history is pretty attractive. So check this out. Let's start in 2015, it was 10 cents. Then 2016, it was 18 cents. Then 2016, it was 20 cents. 2017, then it went to 10 cents, and then 20 cents. Then it cracked 30 cents in 2017. Then it was to 20 cents, and then 10 cents, and then 22 cents. Then it cracked 20 cents in 2018. So one issue, again, is consistency, and I would like to kind of blame a little bit how small the state of Hawaii is in competition. 22 cents, and then 20 cents. 2019, 10 cents. Then 2019, 22 cents. Then 2020, they were 23 cents. They're cracking up their 21 cents. Then they had this little 10-cent dividend, 23 cents. So dividend growth, 3.21%. Payout ratio is 49%. Number of dividend increases in the last 5 years is 10. Annual dividend yield is 4.43%. That's not bad. So if you bought one share, you made 92 cents. So concluding this whole video, I think JXN is the best right now. These guys are a new kid on the block. Again, ARC number 2 and TBNK at number 3. Now, TBNK versus the big issue I have with TBNK is it's just, like I said, you're just in a small state. You're in just Hawaii when you have people like Key Bank or Key Corp or Region Financial or Huntington Bank shares who consistently increase their dividend, consistently increase their growth. I mean, it's not a bad dividend stock, but I like a little bit more consistency. It's still a good dividend stock. This is why I posted a video on it. I mean, it's still a pretty good one, but is it something I would buy? Yes and no. I mean, if you want some diversity in your bank portfolio, that's something you want to look at. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But I wanted to go a little bit in depth with JXN, ARC, and TBNK. Still good. Still good dividend stock. I have seen people on Twitter mention their dividends from TBNK. So it's not like people don't like these guys as a dividend stock. The number of dividend increases in the last 5 years is 10. But the only flaw I see is they're condensed. I think that competition-wise, they're a really good bank. Them and Bank in Hawaii, I think, are pretty decent dividend stocks. But the condensing, competition's pretty fierce for bank stocks in Hawaii. So just take that into consideration. But diversity is important. So, they need insurance. I mean, people need housing insurance for volcanoes and stuff. That's one thing that keeps them, in demand is people need insurance, because if your car, I don't know if they have clauses on that, if molten lava or something, gets in your car and destroys your car, what are you going to do? I don't know their policies on that, but I can imagine that, you know, there is a lot of security with, you know, having insurance or getting loans out for houses. People like to retire in Hawaii. I mean, weather is an issue, you know, that, or volcanoes are an issue, but other than that, it's beautiful. Never been there, but it's beautiful. So let me know what you think of this video. If you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to post one for July 4th. Maybe there might be a collaboration video. You never know. I'll find out from one of my buddies in town who does YouTube videos as well in the dividend investing community. So we'll see. So you guys take care and have a great Sunday.